What's up, Kingsman family? Hope everyone is well. Welcome back to another lesson. Today we are going to be covering how exactly to do our pre-market analysis, or really just find a daily bias going into our trading day so we can make sure that we are prepared as much as possible and kind of have an understanding of where buyers and sellers are likely to take advantage of certain price points more than usual. So let's go ahead and hop right into it. I will be hopping onto the charts real quick and then kind of be, as I'm going, sharing some sauce with you guys that you can then take pieces from and implement into your own trading style. So boom, let's go ahead and hop right into it. Here I have, you can see SPY is absolutely booming right now. But anyways, and I'll actually kind of show you guys how you could have caught this move a little later as well. But I have the three main steps, or the three main things that you kind of want to focus on before market opens each and every single day. Because before the market opens, you want to make sure that you are prepared, right? You don't want to just hop into the markets completely blind, completely not knowing what you're doing, and not having some type of bias or some type of level to be targeting for your trades, right? So doing these three things is going to prepare and help you out a lot more. So let's go ahead and dive right into it. For our number one, that is going to be identifying news/data. Now, obviously, you guys know that data and news is almost reported every single week. And when it is reported, especially if it is the more impactful ones, that leaves an impact on price action, right? Whether that may be higher volatility, or whether that may be price just consolidating and not moving whatsoever, which is the worst. You guys know what that is like. So identifying news and data is really going to give us an idea of if that trading day is going to present higher volatility, consolidation, choppiness, whatever the case may be. Now, when there is data during pre-market, because keep in mind, the impactful data is either going to be reported during pre-market, which is an hour before market open, or the data is going to be reported about 30 minutes to an hour after market opens. But what I'm really trying to get out of this is whenever there is data during pre-market, understand that especially if it is big data, that's going to leave an impact on price action. And price action within pre-market is likely to either significantly move up or move down, or gap up or gap down, during pre-market. Now, that gap up or gap down within pre-market is going to have price open at a complete different point or a complete different price area than where it closed at the previous day. Now, kind of switch it to the opposite. If there isn't any impactful news during pre-market, the price is likely to open near where it closed at the previous day. You guys kind of get the point. But obviously, if there is some type of news during pre-market, that'll lead to pre-market volatility, also meaning that pre-market is just going to either move up a couple dollars to the upside or move down a couple dollars to the downside, right? And also keep in mind, when there is heavy volatility, or when there is heavy pre-market volatility, that then leads an impact going into market open. So boom, that's the main thing. That's step one, is identifying and being aware of the specific news or data that is likely to be reported. Because also, if there is specific news or data, there may be, certain days that you want to just avoid and not trade on whatsoever. But say there isn't, or say there is data at a specific time, you can utilize the timing that the data is going to come out to take a trade either before or after, so you don't get caught in that data volatility. That's what I call it. Whenever data is reported, we have some, pretty strong volatility. SPY is still ripping to the upside. This is crazy. And then obviously for identifying our news and data, we can just go over to Forex Factory. What I like to do is I just filter it out and I only check out the USD, because the only USD folders are really realistically going to actually impact the stock market. We're trading in the stock market, so we don't need to be worried about all the other currencies. And then I only mark out the red folder, orange, and yellow folders, because those are the most impactful, or that's realistically what's going to leave an impact on the market. And then all of these times are going to be Eastern, and then obviously I utilize these data sets to either take a trade before, take a trade after, or just not even trade that day at all, because when there are a good amount of data sets, especially if they are red or orange folders, that is likely to leave an impact on price action, and that impact can either be just crazy volatility or crazy consolidation, which is realistically not what I want to trade, right? Obviously, I want to trade when volume is high, but not high to the point where news is just pushing it everywhere. So that's definitely something to be aware of. So yeah, Forex Factory or Market Watch is where I'm always looking at, when or where news is going to come out. SPY is still absolutely ripping. Two and three are pretty similar, but they're different in their own ways, and I'll explain why. So we have 2 is going to be preparing our key levels, whether that be our pre-market highs, pre-market lows, support or resistance areas, supply and demand zones. Now, preparing our key levels is going to help us understand where the institutional traders are going to take advantage of most. And whichever price range they are taking advantage of most, we realistically want to do the same, because that's where price is going to either be pushed up or pushed down the strongest, right? And that's when we want to be in our trades, when price is moving up or down strong, right? So we're making profits at a good pace. So preparing our key levels is going to be important. Now, what I typically do is I have my major supply zone, my major demand zone, my pre-market high, my pre-market low, and strong support or resistance levels that I see within the charts. Now, what exactly that looks like, and I'll literally show you guys, because I deleted all of my drawings, all of my levels, so we can do this together and you guys can understand why I'm exactly doing this type of stuff. Now, so first, what I want to do is also keep in mind, whenever I draw out my support and resistance levels, typically you guys would do like just a line, or, you're used to just drawing out a line kind of like this, right? Boom, you just have like a regular line. What I do is I draw, or I get a box, like a rectangle, as if I were to draw my supply or demand zone, and that's what I use as my support or resistance level. Due to the fact that when just having one level, you're subjected to only one price. And obviously that one price is either going to be your support, meaning your floor, or your ceiling, meaning meaning your resistance, meaning your ceiling, right? And kind of only dealing with one price can be difficult. But if you use your zone kind of like this as a resistance, then you'll have a little bit more time and a little bit more room to actually play with and utilize while in your trades. So that's what I do for my support and resistance levels, because also at support and resistance, it's not always just going to immediately hit that one price and reverse, or hit that one price and go back to the upside. It's going to take some time for those buyers or sellers to actually step in and push price to that either direction. So that's exactly what I did here. So boom, I drew out my pre-market highs, pre-market high. And keep in mind, our pre-market highs and pre-market lows are basically treated as our support and resistance levels, because wherever the high or wherever the low was, that's where buying pressure or selling pressure was created to not go higher or not go lower, if you guys know what I mean. So, and if that didn't make sense, basically we have the highest point within pre-market. Buyers couldn't push price to go any higher, meaning that the sellers took advantage of that price area and pushed price down. Also meaning if price ever comes and retraces back to that selling area, that same move is likely to happen again, right? Because those sellers want to take advantage of that price point. And then right here, we can see that we have a support being created within pre-market. So I'm going to go ahead and draw that out with my box. Boom, boom. Perfect. And I can already see some reversals. Now we have a support being created within pre-market. Now I also want to look for my pre-market low, which will be all the way down here, it looks like. So boom, boom, and then it looks like price didn't move low enough for it to be touching our pre-market low, but we still have it drawn out anyways, right? Just in case price ever wants to move down, or the following days if it ever wants to retrace back to those certain levels. So we have our pre-market high. We have a support that was created within pre-market because we can obviously see a strong reversal here, and a floor, aka a support, being created within pre-market. Let me see. Oh, we also have a bit of a fair value gap that was created within pre-market as well, which basically also led to this zone being created. So I can just kind of double that out right there. So we have a fair value gap mixed with a support, which is just a bunch of buying pressure built up, right? Meaning that if price ever comes back to this range, those buyers are likely going to want to take advantage of it. So that's that. Boom. So now that we have that, we want to look for our major supply zones or major demand zones, which is going to be very important. But like I was saying earlier, if we ever have high volatility news during pre-market, that's likely to either gap or push price to either the up or to the downside. And whenever it does that, that makes new price ranges or new zones for whatever you're trading, right? And you can obviously see that within pre-market, we had a lot of volatility because there was some data that was being reported within pre-market. And you can see pre-market got pushed up significantly rather than pre-market kind of just chilling, because we closed all the way down here yesterday. Pre-market did its thing, and then pre-market opened, and we had that news, and it looks like right here, this big candle was what kind of was when news came out. So that would be that. And then also realistically, let me see. So now we want to look for our supply and demand zones. Now, let me see here. Okay. Now, how did this? Okay, this is actually perfect. So we have a phase of distribution right here and pretty much the same right here. But anyways, distribution meaning that those sell orders took a bit of time to be completely filled to then push price to the downwards direction. And that's exactly what happened here. So we want, and we can see that we had excessive selling pressure here. Whenever we have excessive selling pressure or buying pressure, we want to target that. We want to draw it out in case price ever retraces back to it. Not in case, but typically price does retrace back to key levels if those key levels are drawn out successfully. Keep that in mind. So we're going to draw this out as our supply zone because we see that there's excessive selling pressure, and literally just extend it out as far as possible. Now, what we would want to wait for is a retest and a rejection into our supply zone. Oh, I just spit. While having our stop loss at a close above the supply zone. And you can actually see that supply zone that I literally just drew out is working out pretty beautifully, right? We already had a nice rejection inside this supply zone, showing you that sellers did indeed take advantage of this price area and did put those sell orders in at the supply zone, right? So that would be preparing our key level. So we had, oops, let me just put this back. So we drew out basically all of the key levels that we wanted to target. And also keep in mind that market is obviously open, but if it was just pre-market, none of this would be here, right? We would just still be drawing out the supply zone regularly how we did. We'd be drawing out the pre-market regularly how we did. the pre-market support regularly how we did, and the pre-market low regularly how we did. Now, step 2 and step 3 are basically done now. The reason for that is because actually step 3, basically what that means is identifying heavy buying and selling pressure. We then want to look for the zones that presented the heaviest reversal. And what that exactly means is the zones that present the heaviest reversal, those are the zones that present the heaviest buying pressure or heaviest selling pressure, which is obviously what we want to take advantage of, right? And then we can see in this case scenario right here, we saw excessive selling pressure. So this would definitely be a supply zone or an area where I would want to utilize for going short. And you can see if I were, it would have worked out beautifully, right? Or it would have already worked out well. I would have been in profits. And then same thing for right here. You can see our pre-market support, which we had drawn out, and we also had a pre-market fair value gap right here. Market then opened, and you can literally see that we tapped into our pre-market support or our pre-market buying area. I'll just call this our pre-market buying area because we have a lot of buying pressure built up here. Pre-market buying area. So we have a lot of buying pressure built up here. Let me just double check to make sure all is solid. Okay, cool. So pre-market buying area, and then you can see we immediately bounced into that, and right at that buying area, look what happened. We had massive buying. We had a massive move to the upside because those buyers wanted to take advantage of this price area. And right here, we had our we had our pre-market high, which we also drawn out, right? And price retraced and tapped into our pre-market high, and we got a beautiful rejection and a reversal right back down to our pre-market support, right? So we have our zones drawn out perfectly. And obviously that reversal meant that those sellers were stepping in, right? You guys start to really, as you start to draw the zones out, you really start to get a better understanding of how exactly supply and demand works. This is all supply and demand. Literally, we have high supply here, which is heavy sellers, and high demand here, which is heavy buyers, right? So realistically, when we have this bounce here, this would be another zone or another area that I would want to retarget because I see that we already got that push into our buying area at market open. So this really tells me that this is an area that buyers would like to take advantage of, not 100%, but would like to take advantage of. So if price ever does come and retest back into my zone, I wait for the necessary confirmations, I take the trade, and the trade plays out beautifully. Now, that's how you identify your heavy buying and selling pressure. Now, if you guys are familiar with my exact strategy, I have the full video posted on YouTube. This is exactly what my strategy is, right? We have our demand zone or our heavy buying area created. And what I want to look for is I want to see a tap and a retrace into our buying area while then sweeping the lows that created this buying area, which in this case would be this low right here, right? So I would want to see, what are we doing here? Okay, it's not drawing out. I would want to see a sweep of these lows right where my cursor is, and that's exactly what we got. Now, rather than breaking below those lows, we still held inside of this demand zone, right? Rather than coming back down farther. And what that means is that the market knew there was orders placed right here, right? They knew there was orders placed right here. So they had to stop the orders out, or they had to stop the traders out, and then push price back up, right? Because they knew there was heavy liquidity filled right here. They had to take and sweep that liquidity and then push price back in the direction that they wanted it to. And then obviously you target your previous highs, which would be up here, and you can see that trade or that take profit would have then been hit beautifully. So trade played out beautifully, zones played out beautifully. And it was just a beautiful, beautiful day if you were to obviously utilize stuff like this, right? Your trading day and the things that you see will be a lot more, it'll be a lot, your trading day will be a lot better, and you'll feel a lot more comfortable if you have all of this built up and ready before the market opens. If you're aware of the news, if you have your key levels ready, if you're understanding where there's likely to be heavy buying and heavy selling pressure, that will make you so much more confident and so much more comfortable going into your trades. And obviously that'll just lead you to taking better setups and being more confident while you are in those setups. So that is going to go ahead and wrap it up for this lesson. I hope you guys enjoyed. I thought this was a pretty beneficial and necessary lesson that needed to be done, and I hope you guys are ready for so much more. I have a notebook right next to me filled with a bunch of ideas that I'm going to do for the lessons, so I'm really going to help you guys and put out as much as I can to bring you to the next level. But other than that, if you guys ever have any questions or whatever the case may be, feel free to hit me up in the Discord or just DM me. Whoa, what just happened? All right. Okay. Feel free to hit me up in the Discord or DM me. Other than that, have a great day, guys. Much love.